Hello everybody, Jim Malone here on Dallas Trading Floor. Well, it is Friday, and I've just got finished working out a great bull puts, bear puts, bull bull put spread on Micron. Wow, I had trouble getting that out of my mouth. But it's a really cool, and it's available on. You might want to check it out. I've got it over on our site, our Discord site. But I've got that one up, so you can take a look at it, just to kind of look at our site. It's basically this is the Discord site, but this trade I've just put up there, so everyone can look at it. You don't have to be a member, but if you like what you see, maybe you want to try out Discord. But anyways, the address on that one is www.vinny.com/Dallas Trading Floor. So kind of wanted to give you a heads up on that one. And just want to get into some of the charts here in just a second. But first, let's kind of look to see kind of how the market is trading, and kind of how we're doing there. Let me see if I can get the right size on this window here. Boy, I tell you what, this week has been kind of a weird week for technical for me. I've had some issues, and hopefully we've gotten done with most of them. So first of all, let's take a look at the NASDAQ Composite first and see how that's checking with that. So I'm going to pull that up here, and here we go. Pull this chart up. There we go. And there we go. So, and you get to see my beautiful mug as we're broadcasting simultaneously on TikTok as well. This is the NASDAQ Composite. It's moving up again. It's pulled back a tad, but it's still, we've got this very nice pattern going on. So, everything is starting to set up really well, and I kind of want to go through some of the ones that I think are kind of interesting looking right now. But we're in a very nice uptrend. I want to go and take a look at some of the things that are setting up well and that might be really good opportunities coming up here. Not just kick the old dead horses. Let's look at the ones. There are some very nice things that are setting up on the on the IBD 50, and I kind of want to go through some of these charts for you real quick, and take a look kind of where I think we're going. Hopefully we're moving back into the NASDAQ, and hopefully things are looking better than they have been last month or two. I'm definitely getting a more bullish feeling than I was basically last week. That's for sure. So without further ado, let me just pull this up. Oops, goodness gracious. I can't. There we go. Out of freeze. Okay, there we go. Okay. All right, let's go to the IBD 50. I just kind of want to look through this. And the reason I'm showing you this is because I do think that we're starting to see some nice setups. And I'm trying to build my watch list here to kind of look. But what I'm going to do here is I'm going to switch over to this list right from here. So what I'm going to do is I'm just going to bring it up and just do this real quick. And I want to show you some good setups. If I can get my screen up. Let's do it. All right. And if you are a member of the digital the IBD digital product, it is a good product. By the way, I don't get paid anything for this, so I should be paying me money, but because I use it all the time. But it's a good resource, and it might we might see some things that are really kind of setting up nicely. Well, gosh, darn it. There we go. Let's see if we can. Okay, there we go. Gosh, took me a little bit to see that one. So let's kind of go through it. Number one on the list, interesting long pin is Grow Generation, but it's down. Let's look at the IBD 50 that's up, and I'm just looking here now. Etsy, of course, I think. Square was really breaking out nicely. Etsy was breaking out nicely. I'm just kind of going down the list here. Snap is up very nicely. Century Communities. Just kind of perusing the list here. Now, here's one that this one I have heard about for a long time. I haven't really done anything. I kind of want to look at it. It's called Mr. Cooper, and what I'm gonna do here is I'm gonna show you the chart on this Mr. Cooper. So hopefully it will come up here in a second. Well, maybe not. All right, let's look at Coop here. Okay, this is one I think you might want to put on your watch list. It's just been moving up very, very nicely. I don't necessarily recommend buying it yet, but I think it should be on your radar screen because, interestingly enough, for some reason, and I can't figure this out, this stock has been doing exceedingly well, and so I just it's a leaderboard stock, and it's just been doing great, and I can't understand why that's the case, but it is the case. So let's kind of go over to the charts and relaunch those charts with Coop. There we go. All right, so this is Coop, and here's the thing. I think we might have a good opportunity. We might have a good opportunity with this one, and the reason I think that we might have a good opportunity is it's just moved into this buy zone. Okay, as you can see, basically it's moved. It went up and then it pulled back, and then now it's right back at the 40-day line. I think it's going to move very nicely in that. It's up a little bit today. The symbol on it is called Coop, C-O-O-P, and it's right in the buy zone right now. I don't necessarily recommend it for everything, but it's just looking very strong. And it's got this nice checklist, 77%. There's good ownership in it, 436 funds, and the industry is remarkably good at 27 out of 1, out of 197. And so, as the economy starts to come back to life, the consumer loan finance area should do better. So this is one you might want to kind of put on your list. It's called Coop, Mr. Cooper Group, and so very interesting stock, and that's kind of one that I want to point out for you. I also want to point out some of the other ones. Now this one, for the most part, I'm not a huge fan, obviously, of financial companies, but this one has been just doing great. It's called Jefferies Financial Group. It's an investment bank. It's called JEF, and this is it's a number one ranked in its group, which I really, really like. And it's just looking very, very strong. So, it seems to be setting up well. So basically, what I'm kind of looking at is to see what we can do with something like that. So let's look at Jeff. And these are just ones I'm just kind of looking at now. I'm just showing you kind of what I'm doing. Again, it's pulled back up and it's sticking right to that 21-day line. It's up 13 cents. It's not a lot. It's not a hugely expensive stock, but I think it's trading very, very nicely. What I like about the stock is that earnings have been very strong in this stock, and it just seems to be setting up very nicely. So these are two kind of financial stocks. I haven't been really doing much with the financial stocks, but definitely with this one, I definitely like it, and it's pulled up to the 21-day line. So you might want to put that on your radar. I mean, I think it's a very interesting play there, and just something that you might want to kind of look at. There's also one that I want to show you in here. Let's get to this. Dynatrace, okay. This one seems to be also doing well. Of course, PayPal. I think you ought to take a look at PayPal. Let's take a look at this. Now, this is a little bit slower than Square, but I do really like this one as well. Now, the 1-2 in this category, Square's number 1 in this category, and PayPal's number 2. I really like PayPal because I think it's a little bit more stable. I mean, I like Square too, so I can't really say that I like one more than the other. But this is one I think that you ought to be on your radar screen. This is I'm kind of doing finance things here, but As you can see, excellent composite rating. Everything's looking very good. And this is another one that I think that, you might want to kind of, you might want to kind of take a look at. So let's look at PYPL. I'm just going to go to the bigger chart here, and so we can kind of get a look-see on this issue as well. So again, it's acting very nicely. It's up $1 today. What I like about this one is it's pulled right above the 50-day moving average, and this is actually, with the exception of the base, this is a very good place to buy it. Right in here, PayPal. Now it's got an improving relative strength line at 78, some nice volume, and I think that as we come back into the open here, I think this is going to be a good day. Now it's a little bit concerned because the industry rank isn't that good, 138, but look at the number of funds that are in this. 3,920 funds. So all the good funds want this one. The checklist is good. If you're looking for a relatively mid to longer term investment, this might be one. This might be one that you want to look at. Wow, I have no feed on YouTube. Is that right? Is that no feed on YouTube? Why can't you share your charts? Oh, okay. Well, the reason I can't share my charts is because I'm broadcasting on YouTube. Now, let me make sure that I should be live. Yeah, I'm live on YouTube, so I think I should be fine there. Okay. All right. And the reason I can't share my charts is because I'm broadcasting live on YouTube, and youtube.com/Dell's Trading Floor. So that's kind of my situation with that. So let's go to the questions from TikTok. What do you think about Tesla? Well, I had to sell Tesla today. It pulled below an area that I really like. So let's look at the chart for Tesla really quick, and hopefully I'll get the chart up. There we go. TSLA. Unfortunately, I had a position in Tesla. It pulled back. It just is. It pulled above. It pulled above this trend line, but it doesn't look like it's going to hold it. So I had to sell mine today. I took a little bit of a haircut on this one. I bought in at 703, and I sold today, basically, right about 675. So I definitely took a little bit of a haircut. I didn't have that many shares, but I took a haircut on Tesla. So I'm going to have to wait a little bit longer on Tesla. So I apologize. Sometimes I don't get them right. Let's look at Blink. BLNK is the symbol there. Okay, great. And Blink charging is starting to make a reversal, which is very, very nice. Now it's down a little bit today, but it's held the 50-day moving average. So I think Blink, might be in a position, possibly by Monday, we might see it move up again. Now, I think that I really like this stock, and I've liked it for a while. I haven't really been in it since since before about the January time frame. One of the things that's going to benefit Blink and ChargePoint, by the way, is going to be the explosion in EVs. There's just not enough charging spaces out there. Tesla is covered very much with their supercharger locations, but Blink is kind of going to take up the slack for some of the EVs that are not made by Tesla, that are going to be made by General Motors and Ford and all the other companies. So I definitely like it. A good entry point. Well, I'd like to see it hold above the 40-day line, but I am interested in possibly watching this for Monday. You see how it performs. It's got my minimum checklist 66. The ownership is still good. The funds are moving up. It's got 44 funds in it. It's still a relatively small company, but it's 50 out of 197 in terms of the sector. So I'm really liking this one. The other one, of course, the sister company to this really is ChargePoint, and that's the other one that you can really look at. So let's look at Blink relative to that. Let's kind of look at the landscape for Blink. BLNK, of course, is the symbol. And Blink charging, and there we go. Okay, so here's the thing. There are some. This is a much more. PayPal, of course, is not speculative that much at all. Blink is a little bit more speculative. It only has a composite rating of 67, but it's still very interesting. It's down today, so I would be a little bit careful. I really want to see it firm up at that 50-day moving average. So I'm looking at entry possibly above, possibly above 45 on Monday, and I just kind of want to look at this. But here's this article that that Investor Business Daily put out that I think is just tremendous, and that is basically, there's going to be a huge windfall in this business. There's just the stimulus is going to be very, very kind to this particular industry. So this is something that you might want to look at. There's going to be rebates for General Motors and also for Tesla. So it's going to be, so those two companies may benefit, but there's got to be a place to plug them in, and particularly for the ones that are from GM and not from Tesla. Tesla's sort of covered on this, but GM not as much on this one. So, okay, well, let's get back to the questions from YouTube. Thank you for waiting. Appreciate it. All right, and we talked a little bit about Blink. Here's the thing. I'm trying to wait for an entry on this one. I want to see Blink, stay above the. I want to see it stay above the 50-day moving average, and so let's revisit the chart here. I really want to see that, because that is going to be critical in terms of where we're going. Now, I've drawn this line here. This is sort of my reversal line here. Looking at the daily chart, it's a very noisy chart. Let's move over to the weekly chart to kind of smooth things out here a little bit. All right, there we go. There's the weekly. As you can see, we peaked here a little bit over 60, and then it's been down, and then hopefully we're seeing a reversal. Now, today, of course, it's off. There's some options expiring, and that's part of the reason why it's down a little bit. But as long as it could stay above this 50-day moving average, I'm much more confident. Currently, I'm not in this stock. I'm sort of waiting for the entry. Right now, the 50-day moving average is set 42.75. So as long as it's above that, I think we're okay. But I still want to see more strength. I'm really looking possibly at an entry above 45. I'm kind of going to wait on this one. Just because I think it's a little volatile. Again, it's not quite as strong as some of the other stocks, and but it potentially is setting up very well. So that's kind of my take on Blink. Thanks, Matt. Let's take a look at COHU. COHU is the symbol that we're looking at. And this is interesting. I don't know this company. Oh, it's electric semiconductor manufacturing. I like the area very much. This is a particularly good area of the market. I don't know if you have seen, but it looks as if Intel is committed to spend about $20 billion for building 2 fabs in Chandler, Arizona. And this is going to be a boon to the electronic equipment semiconductor manufacturing companies, the ones that make the tools. It's going to do very well for them. So Coho should definitely benefit. It's right below the buy point here. The buy point on this one, and this is a good one. It's got a 94 relative strength, so that's strong, and I like the areas. So let me kind of give you the buy point information on this one. I think this is definitely buyable. It's COHU buy point is equal to basically 51.98. So basically, this is kind of where you want to buy it. Right now, it's still a little bit early. It's still a little bit early on this chart. This is the buy point right here. Oops. Let's get that up. Yeah, there we go. Yeah, this is the buy point right here. As you can see, we have this consolidation pattern. It's sort of consolidating, and it's starting to move up. This is what they call railroad tracks here. You can see this. You see how it's kind of up and down, up and down. What's happening here is the buyers and sellers are sorting themselves out. When this goes above this, that's where we'll see we'll see a movement up. Now, one good thing about this, and I want to show you this, and thank you for bringing this up. We have declining volume. Do you see that? Okay, this is critical, and the reason is because when you have this formation where there's railroad tracks like this means that the buyers and sellers are very tightly packed in terms of the price. But they're running out of sellers. That's what this says. So this is this is going to break out. And the question is, when is it going to break out? Well, I think there's a high likelihood that this will break out early next week. And in early next week. But you don't want to buy it at this level. And the reason that you don't want to buy it at this level is because it's not ready yet. It's not ready yet. So what I would do is place a buy stop limit order for I think really it should be approximately this price here plus 10 cents. So what I'm going to do here is I'm going to set an alert at 51.86. I'm trying to get okay. Goodness gracious, I can't seem to find my thing here. Hold on. Nope, it's not going to let me. Okay, so set buy stop limit order for 51.86 plus 10 cents or 51.96. So hopefully that, yeah, there we go. So for this one, here's what I think. Oops, there we go. Okay, for this one, for Coho, COHO, I do think this one is going to be breaking out. I'm going to set an alert on it, and I do believe it's going to break out. So here's what we want to here's what we want to do. 51.86 is essentially the buy point, but we don't want to buy it right at the buy point, and the reason we don't is because we want to see it move a little bit higher so it overcomes this resistance here. So here's what I would do for Monday if you're interested in the stock, and I think this is a very good stock. I would go in with about a half position on this one. I do think this is going higher based on this chart. I would go in at 51.96, but the way you do that is you set a special order. It's called a buy stop limit order, and the way that works is the stop that you put in is for this. You say like buy 10 shares COHO, and then the stop is going to be 51.86, and then the limit that you put in is 51.96, 10 cents above that. So here's how it works. If the stock next week breaks out above the buy point, 51.86, 10 cents above that, it's going to buy it. So if it breaks out above that, then you're going to get a fill. So this is a very nice way to do it where you don't have to be watching the chart all the time and doing market order, because this is going to fill probably if it moves above that buy point. So this is looking very, very good. This is a very good choice, and I think you might have a winner here. So thank you for that. Thank you very, very much for that. Very, very good. Let's look at Boot, B-O-O-T. These are great questions, Matt. I really appreciate it. Let's look at Boot. So Coho, I definitely think you could do a buy stop limit on it. I really believe you can. This is Boot Barn, and again, boy, you've picked some really good ones here, Matt. Really good ones. This is also a blue dot. This is what they call a blue dot, and very, very, very good. It's up after hours. You might have trouble getting this one on Monday, but again, this is the kind of thing that you want to do. With this one, I would set a order. If you want to buy this one, don't buy it unless it moves above that very critical 69.18 price. That's the buy point. So I'm going to put an alert on that. But what I'm going to do is, because I know I want it, I'm going to set a buy stop limit order on this one. And I like to buy with these buy stop limit orders because that allows us basically to do it automatically. And so the amount that I believe that you should set the buy stop limit order, and this is a very good stock too. Boy, you've come up with some two really good ones. 69.18 plus that 10 cents, giving us 69.28. 69.28 for the buy stop limit. So on this one, here's how I would buy this one. I think it's totally buyable right now, and it will break out probably next week. And the way you do that, of course, is set that stop order, that stop amount for 69.18, and then if it moves above that stop, then it's going to activate the limit order, and the limit order is going to be 10 cents above the stop for 69.28. So this one also just looking very, very good, and I think it's going to work very well. And boy, you've gotten two really nice. I think those are both excellent. Those are excellent choices, Matt. So very, very nice. Okay, great. Shopify or Amazon calls. Good question. Now here's what I'm probably going to do on that. They're both going to benefit. I like the Amazon calls better, and the reason is because they're a little bit more stable. They're less volatile. What I'm going to probably try to put together is an Amazon spread, a bull call spread on Amazon. That's so I can get a little bit more of this. The reason I like the bull call spread so much is because it allows me to leverage a lot more. But let's look at Amazon, and let's look at the options for Amazon here. So with Amazon, I think that we've moved. We're moving very nicely. Look at this. This is a very nice. It's up $72 today. It may pull back a little bit tomorrow, but it's looking very good. It's already pulled back a little bit, about $3. But let's kind of take a look and see if we could find some options that might work for that. So I'm going to look at the options here on Amazon, and I kind of want to go out a little bit further. I kind of want to see where the activity is, the call activity is, and see what the open interest. It seems as if right now there is a lot of interest for the July 21, July 21 $3,400 call. So I kind of want to own that one. I kind of want to own that one. And the reason, here's how I can tell, is because as you can see, there's a lot of open interest to buy this one. As you can see, it's a lot of open interest. So that's the 721 call. So let's see if we can construct a call spread here to see if I can put together a call spread that might make sense. I'm going to go ahead and see if I can do that just real quick using another great site that I love to use here called Options Profit Calculator, and it's a kind of site that I want to show you here because it's kind of cool. And I'm going to go look to see if we can do a call spread, and I'm going to look at Amazon. And let's take a look. And the call that I really interested in is owning. I want to own the July 21. I want to own that July 21 call. So I'm going to go out here to July. Let's do that. I know this is not making a whole lot of sense right now, but it will in just a second. So I'm going to go out to the July 16th, and I'm going to go to the 3,400 call. Let's see if we can get that one. That's the one with the most action on it right now. Yep, there it is. And then I'm going to look to sell the underlying. Okay, so I'm going to look at kind of the underlying call here, and so I'm going to, let's see if we could do this one. And okay, let's see kind of how that's looking. Yeah, oh, that's a credit spread, so I don't really want. Okay, so let's go. So this one would be kind of give you a look-see on how I would put together a call spread for Amazon. And I'm going to click back over here just a sec. There we go. All right, there we go. So here's how I would construct that spread for you. Is that I would go ahead and buy. I would buy one July 16th 3400 call. That's July 16th. And then I would sell a 3450, the one underneath it, by $50. It's a fairly big fund. The total cost on this one out of pocket, that gives you an idea, is going to be, it's a fairly expensive play here, but $22.25. So the risk is $22.25. That's the maximum risk, and the maximum return is a little bit higher than that, $27.50. So, and it would have to move above $34.22 at the expiry. So this is how I would play it. As you can see, if we move higher, we're going to move right and nicely into the profit here. So I am bullish on this. That's why I'm looking at this one. So this has the potential of making, a little bit better than a 50% return on this. I'm going to show you the Amazon chart here again. So I do believe that we are moving upward on this one towards this. We're moving above the $3,500 level. So I do believe that if a call spread on this one would be the way to go, a bull call spread. And what I'm going to do is I'm going to see if I can tonight put together a nice bull call spread on this going higher. But I definitely like the Amazon better than the Shopify for the bull call spread, just because it's a little bit more stable. But I want to look at Shop as well. Let's look at Shop and see kind of what the situation is there on Shop. Oops. Okay, Shop. There we go. All right. Here's the thing about this one. If you're just going to buy the calls, and I kind of would recommend not just buying the calls naked. I would want to do the call spread, because I think it's going to give you more. It's going to give you a you have a less loss potential on that. So out of these two, I think you're better off with the Amazon, and the reason I do is because it's more stable. A bull call spread on Amazon would probably work very, very well based on what I'm looking at. Now, but that said, I want to look at the options activity on Shopify on there. It doesn't appear that there's as much option activity as there is with as there is with Amazon. So that's kind of my thinking on it. Also with Shopify, you've got a 76 relative strength, and I think Amazon it's a little lower than that. AMZN, of course, is the symbol for Amazon. And let's look at that one. Yeah, it's 39 for Amazon. It's much higher for Shopify, but the fact of the matter is, and this is where I really, really like Amazon as opposed to Shopify. Amazon has reversed off of the 200-day line. As you can see, it's moved above it. This is very bullish, and Amazon is obviously a very big company. Amazon looks like it's going to go higher, at least in the near term, and I'm pretty positive of this. So I would be probably doing a bull call spread on Amazon. That's I think that I think that's potentially a winner. Anything if Amazon moves over 3,400, then I think it's going to be very nice. So what I would consider doing possibly is a bull call spread, and I'm going to try to adjust the numbers here a little bit to see if I can get a I can get something, or I possibly might do a bull put on this one. I'm gonna look at this more carefully, but I want to look at this for a potential spread trade. But it's both looking very good. But I think with the two, you got to go with Amazon. I think it's just stronger of the two, and so that's how I would choose it. Thoughts on Denbury? I got shaken on Denver. I still like Denbury a lot. I like the oil and gas sector. And I do think, I was set a little bit tight on my stop. It's up today. It's up today. So you can see what it did. It came down and it tested the 21 day, and then it moved back up. I still think this is a very strong sector, and I think it's very much worthwhile to do. It's got a 93 relative strength on this. The ownership is improving with the funds. It's got 219 funds in it. It's number 3 out of 197. So I'm still very bullish on Denbury Resources. Basically, the only thing that it failed on in the checklist in the last go-round was the sales increase. And the only reason really is the price of oil. As the price of oil goes higher, I think that, this is going to be an excellent area to be in. I just, I can't see how it can, I just can't see how it can be otherwise. I think it's going to be a very good area to be in, and I just want to look at the price of West Texas Intermediate just to kind of see price. I want to look at the price of West Texas Intermediate because that's going to kind of tell us, at least for the oil and gas, where things are going. So I'm going to just pull that up here in a sec and see if we've got, yeah. Again, it's right at a pivot. Basically, it's pulled back. There's some resistance right about $60 on the WTI, but it's just looking like it's going to move above that. Today's high was 59.95. For some reason, there's a psychological thing. If oil moves above 60 and holds it, I think you're going to see even more investment in the U.S. E&P area, and of course, Denbury is one of the best ones in that area. So I like this chart of West Texas Intermediate, and I do think that Denbury is is good in that area. I want to kind of show you the weekly chart. Now, here's the thing with Denbury. It's almost straight up. This is the weekly chart for Denbury Resources. This chart is looking very strong, even now. I mean, I was shaken out of it a little bit. It's off a little bit over the week. It's down about $4 on the week, but I still like this chart, and I still like this area a lot. So, sometimes you get shaken out. That's all there is to it. But I do like oil and gas in general. I really do. I think it's doing great. Let's look at Apple. Now, with Apple, as everybody knows, I sold 2 covered calls on Apple this week. I bought, right before it was under, when I started buying it at 127, and then I moved in again at about 128. It's closed. Its after hours close is up 132.91. I think this is looking very strong. I mean, on the weekly chart, it's up $10 on the week. So I think Apple, for the size of this company, I think it's made a very nice move. And as you can see, we're probably going to we're probably heading to the 137.98 level. If we can get past that 137.98 level, it will go higher. There's no question in my mind that it will go higher above that 137 level. And so, as long as we can stay above this, as long as we can stay above the 50-day moving average, I think we're looking very strong. I started buying this right as it moved above the 21-day line to the 50-day line, and then as it's crossed, that's where I was buyer, because you're now starting to see hopefully this rally will continue. I do think it is continuing, because you can see as the price, and this is what's interesting here, as the price is moved up for Apple, the volume has moved up as well. See that? So that's very interesting. If the price moves up, the volume moves up. That's very bullish. That's extremely bullish. Now, it is going to be doing earnings in about 19 days. I may be a seller into earnings just because I don't know if I have enough cushion, but that's the reason why I did do the calls on it, because I wanted to cushion that, because I do think, coming through earnings, it may fall off a little bit, but I think finally after waiting, almost 9 months, I think Apple may be back. I really do. I think Apple may be back. As you can see back here, last year, this is August 31st. This is when it had the 4-for-1 split. It made its peak 137, and then it moved down, and then it tried to make another attempt at that at 138, but it failed, and then it came back again, and then it pulled through, but then it sort of failed back again. So I think that the third time, typically, when it's trying to make a breakout, is the charm, and I do think that's going to happen this time. But maybe I'm overly optimistic. But I'm liking this very much. I'm liking the action on Apple, and I think that if it goes above 137, I think almost everyone should consider possibly getting exposed to Apple somewhat, because I do think it's going to go higher. Any good lumber ETFs? Wow, that is a good question, Kyle. I don't know, but I do know that there is this stock that I like a lot, that I was talking about yesterday. It's Fraser FRG, I think it is FRG. It's the Canadian Timber Company. No, it's Franchise Group. Sorry, it's the wrong one. Let me see. I should know all these symbols by heart, but it's Fraser Timber. And where is it? Where is it? I'm looking back through my notes. Okay, let me go back to see if I can get the one of that Fraser. I think it's Fraser Timber Group. I think that's what it is. Got to find the symbol for this one. Yeah, West Fraser's Timber, WFG. This is the one I do like. It's called WFG. It's West Fraser Timber, and it's reacting very nice. It's right in the buy zone right now, Kyle, and it's got a 98 relative strength. It's this nice cup. Now, this cup formation is a little bit tough to buy because sometimes it'll pull back, and it is definitely pulling back here. But it's right now. It's in a buy zone. I'm liking this action on the volume, because as you can see, the volume is moving down. Typically what that means is the overhead supply is running out, and it looks like it's probably going to move higher. That's what it's looking like anyways. This is a very good area. There's going to be a lot of action. There is a housing, interestingly enough, there is a housing shortage. I do think there's going to be some foreclosures out there. But there's a lot of demand for new homes, especially here in the Dallas area. I know that for a fact. And, we just don't, the lumber prices have really gone up. So this is an area that I think is really good in terms to look in. Let me kind of give you potentially some other places to look. I want to kind of look at the competition for West Fraser Group to see, and to kind of see if I can give you a good look on that. So let me pull this up. All right, let's see if we can get something that's good. I'm just doing my research here. There we go. Okay, cool. Let's put this one. And basically, this is number one, and this is let me just pull that off. There we go. Just so you can see it, see how how this one is stacking up. This is West Fraser Group. This is in the timber group. I think this is one you want to kind of look at. It's number one. I always like my, I'll be honest. I like, I like the number ones. I like the number ones, and I think this is the number one. And it's pulled back a little bit today, but the volume is up. The price by the week is up. Because see, look at the weekly chart. We'll pull the weekly. The weekly chart is way up. It's pulled past this resistance. It's just looking very strong. I mean, it's just looking very strong. I kind of want to look at it in other things. The accumulation rating is A on this one. The SMR rating. This is a very good. This is a kind of an enterprise rating. Excellent. It's got the top relative strength, 98 relative strength. There's only one better, and that's 99. Looking very strong. The earnings are a little bit weak, but remember, it's just the question of the market, and the composite rating is 99. So I just have to, think, I think it's a good time to invest. Now, let me just check to see what they're saying. A handful of leading growth stocks have made notable moves this week. The key buy point. See, I think this is a very good area. This is just West Texas Fraser is the number one. It's in the 5% buy zone. Everything is good on it. Boise Cascade. Now this is interesting. Boise Cascade maybe too. In Louisiana Pacific. So there's LPX is good too. So there's a number of good ones. I can see why you want to get the ETF. I just don't know if an ETF. That's the main thing. But LPX is looking good too. Wow. LPX is looking good as well. So let me see if I can pull up LPX. Let me see if I can pull up LPX as well. This is West Fraser, but let's look at LPX because that's Louisiana Pacific, and along with Boise Cascade, I think there's the leaders. So this is a good chart as well. Excellent chart. It's basically even after hours, so I'm basically liking this a lot, Kyle. Very, very good. Just don't know any good ETFs in that field, but just looking very, very good. All right, so let's look at the next buy point for Nike. All right, let's see if I can find a good buy point for everybody on Nike NKE. And Nike has, it's still in this consolidation. It's above the it looks like it bounced off of the 200-day line, so that's good. It looks like it may have made a reversal, and it looks like it's moving higher above the 50-day. So here's what I would buy. It's not there is a buy point on this one. It's a consolidation, and it's a second stage. It'd be 147.95. But if you want to go early, what I would do here is if you want to go early on this one, I think what you could do is for Nike NKE, the buy point is 147.98, or if you want to go early, I think you could buy it off the 21-day line because of based on this, and the 21-day line currently the 21-day line is right at 137.71. 137.71 at the 21-day line. So this is kind of how I would, I would pay it. The next Nike buy point really is this 147.95, but it's a consolidation base. It's not a particularly good base. I think you could go off of the. I think you could, as it looks like it's reversed off the 200-day moving average. It looks like it's going to move above the 50-day. Excuse me, I said 21-day, but it really is the 21-day. As it moves above the 21-day, I think you could buy it right in there. We're very close to that level. So 137. It's at 135 right now. So we're very close. You could possibly buy this at about 137. That's the earliest I would look to buy it, because it is it still hasn't shown enough strength, but that's the earliest I would buy it. Now the relative strength is a problem. It's only a 40 relative strength, but it is Nike, and when the economy reopens, it's going to be a good play. The problem here, there's several things I don't like. It's got a 44 checklist, so I'm a little bit less excited about this one as I am about the lumber plays. But if you want to get into Nike, I'm probably not going to be in Nike, but if you want to get into Nike, the buy point is 147.98, and the early entry is about 137. So that's what I'm seeing on it, anyways. That's kind of how I am seeing that those entry points. So let's go and see if I can get a somebody from TikTok, because I've been neglecting TikTok. So here we go. We're back. What do you think about Tesla? Okay, blank. We talked about that. Are you running into? Yes, I am. By the way, everybody that is looking at me on TikTok, I am simulcasting right now on YouTube. You just go over to youtube.com/DallasTradingForward. Now, and it's so easy. All you have to do is go to my profile and then hit the link. It says beacons, and if you scroll right down to the bottom, I have it embedded in there, so you'll be able to see it by doing that. So that's a good way to go. Let's see if I can get some more questions from TikTok. So thank you for everybody looking on TikTok. Any more questions? Why can't you share the charts? Well, the reason I can't share the charts is because unfortunately right now TikTok does not allow to run a live feed. I can do it on YouTube, but I can't do it on TikTok. So, do you recommend putting your money investing rather than keeping it? Well, here's the thing. You can keep your money in savings, absolutely, but the most you're likely to ever get is maybe 1% on your savings, which I don't think is a very good return. If you just do this one thing, and this is the only thing that you do, if you take your money and you put it in what they call the QQQ Trust or the Spider, and you just leave it there. Now, I recommend taking it out when the market trends downward, but if you do that, you will be far, far better than if you just leave it in a bank account. So here's the thing, and I want to say this literally to everyone out there. Again, I'm not trying to give you any investing advice. I'm just trying to tell you how I would trade things. But I just want to show you. I just want to show you how and why it's such a great thing to be in some of these index funds. So you don't have to pick individual stocks like I'm talking about here. You can just be in the QQQ. But I want to show you the results from just having your money. If this is all you do, and you're in the QQQs, if there's a major downturn, you take your money out and you wait it out. But if you look at this performance since 2000. Look at this. It's just up this is the overall market. It's up every year. Look at that. If you had your money in a passbook savings account, guess what? It would just be flat. It would look basically like that. But just by buying one index fund, the QQQ, look at that. So that's the reason I'm bullish. I have to admit I am bullish on the market because of that. So talking to everybody out there. I mean, I think hey, this is the way to go. Now I have a question also from TikTok. It's about AMD. Let's look at AMD. Of course, AMD is an interesting company. Of course, for years it was run by a guy named Jerry Sanders, and then it kind of has now. They've got a new CEO, and she's super. Interestingly enough, she's related to the guy that runs NVIDIA. Go figure. Well, obviously. Here's AMD. AMD has been pulling back as of late, and I'm still looking for it to make it bounce. It looks like it may have reversed off of the 200-day average. That's this black line here that I'm showing you. And by the way, if you can't see this and you're looking on TikTok, it's easy to get on and take a look at it. All you have to do is to go to my profile and then click the link. It says beacons, and then you'll see if you scroll down, there's an embedded thing that's showing the YouTube video. Right now it's live and it's with the charts and everything, so you can see that. It looks like it has reversed off of the 200-day line, and it's right below the 50-day moving average. That's this red line here. Well, the good part about it is that if this pushes through, then it's probably going to go higher. But right now I can't recommend being in it because it just hasn't shown enough strength. It looks like it's getting ready to break out. After hours it's off a little bit. Right now I think you're going to be a little bit careful in this. It's got a very good checklist, 66. I definitely like the stock, but I think there's other options. And one of the other options, and I know this is kind of strange, but it's my old-time friend. I haven't really traded this stock in years, But when it gets going, it's the good thing, and it's Intel. INTC is the symbol, of course, on Intel. It's a mega company. Everybody's heard of them. But I just love their chart right now. I haven't loved their chart for just a long time. I haven't loved the chart of Intel. But right now, Intel is right in the buy zone. It's right at the top of the buy range. So, I don't know how many more days that we have to buy this going into next week. But I like this stock better than AMD right now. I really do. It's coming out of what they call a double bottom. I want to show you the weekly chart to see you can see that. But it's coming out of what they call this double bottom pattern. There we go. It says it's a cup with handle first stage. This is extremely strong chart pattern, and this stock has been asleep for a very, very, very long time. But I think that Intel should be on your radar screen, because when this stock gets going, they've got a new CEO. When the stock gets going, they got rid of Swan. Not that no, nothing against him, but they've got a new guy in there, and he's looking very strong. This is one of the chips that I think you really ought to consider is Intel, because not only are they a manufacturer, because they're going to start manufacturing for other people, they're also very strong in their own right. So right now, and literally, Intel hasn't set up really well in several years, and I think it's setting up very, very nicely now. So probably gushing too much on it, but it is a company that I totally think is ripe to go. Okay, I'm just kind of looking here. I'm kind of running to end of the time, unfortunately. Thoughts on CRM? Okay, let's take CRM. That's probably the last one. Thanks, Jeet. Appreciate it. CRM, of course, is Salesforce. This group had, for all last year, the software enterprise group was just was doing great. It's starting to see some more life, but it's not the leader right now in tech. The chips are, and I think you got to look at MU. That's where by the way, if you go to my site, I can show you that in a second, vinny.com/DallasTradingFloor. I can show you a spread that I did today on Micron. I like Micron in this one. It's funny. I like the oldsters in this area. I'm also in Corvo, but that has not been performing as well as I would have liked. So, Salesforce in these the on-demand customer relations management, it's still good. It's pulled above the 200-day line. I'm liking seeing that, but it's got extremely weak relative strength at 32. So. I really want to see. I'm looking possibly to watch this one. It does look like it's gaining strength, but it's off a little bit in after hours. So I'm a little bit leery on this one. It has a good checklist at 77. The industry, though, I'm not liking the industry, and this is my main concern with with the software group. I mean, with the computer software enterprise group right now, is it's just very weak in relative to the other ranks. It's at 184 out of 197. So this is why I like the stock, but I want to watch this one. I really don't want to be in it. And I kind of want to show you another place that you might want to look. I like MU right now a lot, and I'm going to pull that up on the screen. I think that this is a stronger area of tech to be in. I like tech, of course, but I think that it moves around. This has a much stronger relative strength at 85, and this is moving higher. By the way, for everybody out there that's interested, I did detail how I did a bull put spread on this today, and that's available. You can take a look at it. Actually, for it's not in the paid section, so you could take a look at it by going to www.vinny.com/DallasTradingFloor, and you'll be able to see this spread trade that I did. Now, of course, for the Discord members, they get special insider information and access. But I put this one up there because I just did it this morning and I wanted to get it out there, and I think it's a good thing to look at. But out there, so you might want to consider going to www.vinny.com/DallasTradingFloor. Well, I have come to almost an hour. I'm actually 30 seconds to go here. I just want to tell everybody looking online on TikTok, I do broadcast live every day at 2:30 Central, and I do simulcast on YouTube at youtube.com/DallasTradingFloor. And I do broadcast on there because I can show the charts on on YouTube. I can't, unfortunately, on TikTok. I'm hoping they're going to have that capability soon, but right now I can't do it. So that's the reason I simulcast on both platforms at the same time. So if you want to see the charts, and I'm pulling up the charts all the time, just go to the YouTube site, youtube.com/DallasTradingFloor. Well, if you want to get on the mailing list to subscribe to the Action Trade Alerts, it's very easy to do. And this, of course, this is totally free. This is totally free. And this one, you just subscribe. Basically, that's the YouTube channel, of course. That's Vinny. I apologize. There we go. To subscribe to the free Action Trade Alerts, you basically go to www.DallasTradingFloor.com. And you need your first and last name, and an email address would be great so that I can send them. And I do send email blasts basically several times a week, just kind of showing you kind of lists. I usually try to do an top rated stocks under $10. I try to put that out, and a few other ones. But I should have some content out over the weekend on possibly, because the IBD 50 is setting up so well, because they're starting to move into the market, I want to go and put a watch list out there for everyone, and I'm going to have it out probably on Saturday night or Sunday night, depending on when I get it all done to everybody. But you got to be on the Action Trade Alerts list, and that is at www.DallasTradingFloor.com. Just need first and last name and an email address, and you get right on. That's free, and you get so anytime you like. So it's kind of a fun thing. Last question from TikTok. Any suggestions for long-term stocks? Well, I don't recommend long-term stocks because they can change. I recommend long stocks for trading, but if you're wanting to invest long-term, I really believe that the QQQ is the way to go. It's what they call an exchange traded fund, and basically what it does is it buys all of the top stocks that are in the NASDAQ. And I think you should look at that one if you're looking to do a long-term invest where it's a kind of a set and forget kind of deal. I think you want to look at the QQQ. So till tomorrow, till Monday. I will be back on Monday at 2:30 Central, 3:30 Eastern. Till then, happy trading, and be careful this weekend, and I hope everybody has a great weekend. I know I'm going to be out in my garden planting flowers, so that's a kind of fun thing to do. So till Monday morning at 2:30, happy trading.